Hello and welcome back to the channel. In today's video, we're going to be looking at one of the many great trades that I took this week. This one was an intraday trade on GBPUSD that came just before the London session began. It was an early day trade, an intraday trade using the very low time frames, even going down to the 1 minute for my execution. If you've been following me for a while, you'll know that my strategy works on high time frames and low time frames, and this is a perfect example of one of those low time frame moves. First of all then, looking at the market, because it's a low time frame trade, we only need to look really at the lower time frames, right? The 15 minute, 5 minute, 3 minute, and 1 minute. And if we can understand what the market's doing on these higher range of these time frames, the 15 minute, we can then work out good areas to buy from, good areas to sell from, and good areas to target for our trades as well. Now you can see on the chart I have these colored boxes. This is actually an indicator that just shows you trading sessions. The blue box is the Asia session, the green box is the London session, and this red or pink box is the New York session. So based on the trade timing and the session characteristics that I've spoken about over on my Instagram, if you haven't seen that already, we can actually use this to our advantage because we know we normally get consolidation through the Asia sessions, then we get a large push of volatility through the London session, and then sometimes we get a reversal through the New York. Oftentimes we get a reversal through the New York. Okay, so for now we just need to focus on that Asia session consolidation, these slow ranging movements. Then we can actually consider the London push to actually execute a trade through. So if we look at this, then first thing we can see is that the market is approaching the high of the Asia session, forming almost equal highs. If we then move to the left, we can see here we have this imbalanced price area, which takes us into a supply zone. So if we just cover this supply zone on the chart, you'll see that right now we're trading just beneath this zone with generally equal highs at the top of the Asia session. So I would expect the Asia session range to actually be swept out, right? The liquidity above this area to be swept out. So I expect the market is going to push further into this 15-minute supply zone. From there, it's very likely that the market will sell off. Now for this trade, I didn't want to take the market too far. The reason being, while we did have this break of structure here with this large impulsive downside move, which has obviously taken us into a low time frame downtrend, if we scale back to here, we can see that on the hourly time frame, and you can even see it here on the 15-minute, this area of demand that we've come down and traded into has been retested, and the market has then started moving up. So essentially, the market is still in a higher time frame uptrend, but we do have, with these other confluences, the break of structure, the bearish impulse, this supply zone, the imbalance, and the low of the Asia session to be swept out. We have a few confluences for a low time frame trade, right? So what we can actually do is use those to our advantage, stick to this low time frame movement for now, and just go with a modest target. Because if we can get in with a good entry and a good stop loss, which we will be able to do because it's a low time frame trade, we'll be able to get some really nice profits out of this, regardless of a small target. So going to the lower time frames now, we'll drop it to the 5-minute to begin with. What we can actually see here is that we can further refine the supply zone that we're working with. If we see here this blue candle, this is the movement before the impulse really kicked in. So if we mark this blue candle out as our supply zone, we can then see, okay, if the market comes into there, that is going to be the prime selling point for me. That will fill all imbalance and trade us into this refined supply area where the market is very likely to sell off. We can execute a trade from there if we get the right confirmation. So allowing the market to make some movements, then we can see that it did indeed come and sweep through the highs of the Asia session, tap into this 5-minute supply zone, and then begin rejecting from there. It was around this point that I actually went ahead and looked for a position to execute. So moving down to the lower time frames now, we're viewing the market on the 1-minute chart. As we can see, we came in forming these higher highs and higher lows, tapped into that 5-minute supply zone, and then made quite a fast sell-off. By this point, we hadn't yet formed a lower low, so we wouldn't really be wanting to execute any shorts until we do that. So if we mark out the structural point, the significant structural point, we can then see if the market comes and breaks through that level, we could begin looking for shorts, okay? So as we can see, the market did indeed come through and it did break that level. Now from this point, we had a break of structure. So what we can do from here is focus on two areas, right? We have this zone, which is the zone that broke the structure, therefore making it quite an area of interest. But if we look above, we have a very, very clear open imbalance into this extreme supply zone. So in this instance, what I actually did was just hold off. I'm not too confident selling from that low zone just yet, because if we do sell from this low zone, chances are it's going to come through at some point and fill this imbalance due to just how extreme this imbalance is and the fact that we are still just about ranging. So I just stuck with my guns on this one, and I was looking for a movement like this to occur to bring us up into that higher point. Obviously, had we reacted from this area and then started selling off, I would have then looked for a continuation move once the next break of structure came in. Where the market is right now then, if we allow it to continue, see how it played out, we can see that it did indeed just push through this zone. It didn't, however, fulfill that secondary area. We came just short, and then we started to sell off once again. Now, it was at this point that I decided to go for another movement. The reason being, if we look, we just about went and took out that low. So after we then took out that low and we'd filled most of the imbalance, I went ahead and placed on a sell limit on quite an obvious zone. Now, I think if you can see from here, we've gone and filled all of this imbalance really now. We've had this sell-off, we've broken this next structure point. We do have a very, very, very clear imbalance into here with a supply zone just here. So what I actually went and did on GBPUSD here was place my order on the low of this region because we can see the order flow is clearly bearish. Retest of the supply zone, and from there we've started forming these lower lows and lower highs in a consistent fashion. So at this point, we'd seen the break of structure, and I went ahead and executed my short order with around a 5 pip stop and a target down into the low of the Asian range. So I'm expecting from this point, we can come and sweep through this low, and we may continue down, in which case we can look for larger continuation trades. But if not, we've secured a easy 4.4R position or 4.4% position at the start of the day, early into the London session, and by this point we can just sign off and relax. So if we watch how this played out, then we can see we did indeed push back up, trade into this area. It's very clear that we're going to do this by this point because we know this imbalance has to be filled. As soon as we tapped into that supply zone, the market sold off and made a very quick movement down into our target. And as you can now see, the target was smashed pretty quickly. A very clear trade, bringing 4.4R in under 15 minutes. Now that is the beauty of the strategy that I use. You can bring this to the low time frames. You can trade it on the high time frames. That is how I broke down the GBPUSD market for the morning of Thursday, the 7th of October. And that is how I pulled a 4.4% position out of the market in under 15 minutes of trade management time. I hope this video has been beneficial for you. I hope you can learn a thing or two from this and actually begin implementing these low time frame trades into your day-to-day trading as well. They can be really profitable, and yes, sure, swings are more relaxed, but these are very fast in and out trades where you can make quite a lot of profits in a small period of time. And if you take one of these, you may not need to take another trade for the rest of the week. 4.4% is literally brilliant. That could be half a month's profit. So you can see the power of this kind of trading and the ability that it brings you to make some serious money in the markets on a regular basis. Before you go, I have a few things to share with you. First of all, I have a free trading course which you can enroll in right now to actually access a 13-part video series teaching you risk management, technical analysis, and trading psychology. It's completely free to join, and you can do that right now by going to the link in the description. The other thing is the 20x program. This is my investment thesis for cryptocurrencies for the next couple of years and how I plan to make between 1,500 and 2,500% profit from a couple of well-established cryptos. You can join us on the webinar at the end of October. You can get access to the document outlining the investment thesis, and you can get step-by-step updates every time I take action via my private mailing list. You can do that by heading over to the other link in the description, the 20x program, and signing up for that today. So once again, thank you for watching. Have a great weekend, and I will see you in the next video.